Good day. Today, we will cover Topic 5 Part 2. Topic 5 Part 2 is related to the cash book and the internal control over cash. We have 5 learning outcomes for this topic. Number 1, explain the purpose of the cash book and petty cash book. Number 2, record transactions correctly in the cash books and petty cash book. Number 3, post entries for discount received, discount allowed, and dishonored check to the respective accounts in the ledger. Number 4, record contra entries correctly. And number 5, explain the impress system. As covered in the Topic 5 Part 1, cash book is part of the books of prime entry. In this slide, it tells us the relationships of the source document, transactions, and the book of prime entry involved for the cash transactions. First, we have cash bill received. This is related to the cash purchase. In the book of prime entry, we will record credit in the cash book. Next, cash bill issued. Related to the cash sales, we need to debit the cash book. Number 3, received. Related to the cash payment, it will be credited to the cash book. Number 4, receipt issued. Related to the cash received, we need to debit in the cash book. Next is vouchers. This is related to the payment made but no receipt issued. We have to credit the cash book. And lastly, we have check buds. Related to the payment by check, we have to credit the cash book. What is the purpose of the cash book? First, reduce the number of entries in the ledger. There are usually a large number of transactions involving the receipt and payment of check. If recorded in a bank account, which is the ledger, it will be cumbersome. So the cash book is used to record receipt and payments by check. Number 2, divisions of labor is made possible. One can write up the cash book while another can work on the ledger. It will reduce the possibility of errors. Check on the work of the person who write up the cash book where it is posted to ledger by someone else. Number 3, provides easy cross-reference. Cash book is a book of prime entry. It is a part of the double entry system. So we can use the cash book to cross-check all the records that have been made during the accounting period. We have two types of the cash books. One is two-column cash book, another is the three-column cash book. The two-column cash book. In practice, the small amount of cash received and paid is usually recorded in a separate petty cash book. The cash book does normally consist of a two-column with bank and discount column. The cash book is used instead of the bank account in the ledger. It is written up from the bank paying in book and checkbook stubs. It is actually a book of prime entry. The columns on each side that are used to record check received and paid are a part of the double entry system. The other columns on each side are memorandum. Like the day books, it is to ascertain the total discount allowed, which is on the debit side, and the total discount received, which is on the credit side, to facilitate the bulk posting of transactions through the ledger. There are two formats for a two-column cash book. First is to record the cash received and cash paid in one money column on each side and check received and check paid in the other column on each side. You will have the date, particulars, folio, cash, and bank column on the debit side and date, particulars, folio, cash, and bank column on the credit side. The second format is to record the check received and check paid in one money column on each side and cash discount allowed and cash discount received in the other column on each side. For the second format, you will have date, particulars, folio, discount, and bank column on the debit side and date, particulars, folio, discount, and bank column on the credit side. The difference between these two formats depends on the transactions given to you. If in the transactions, you only have the bank transactions, no cash transaction involved, so you will have to use the second format for the two-column cash book. But if the transactions given to you involve the cash and the bank transactions, then you should use the first format for the two-column cash book. Next, we have the three-column cash book. This is not common in practice, but sometimes used in examinations. It combines and replaces the cash and bank accounts in the ledger. It is a book of prime entry, and the cash and bank columns are a part of the double entry system. The discount columns are used in the same way as those in the two-column cash book, which is for the memorandum purpose. This slide shows us the format for the three-column cash book. In the three-column cash book, we need to record cash received and cash paid in one column on each side, check received and check paid in one column on each side, and cash discount allowed and cash discount received in the remaining column on each side. So, in the three-column cash book, you will have date, particulars, folio, discount column, cash, and bank on the debit side, while date, particulars, folio, discount, cash, and bank columns on the credit side. The discount column on the debit side is to record the discount allowed amount, while the discount column on the credit side is to record the discount received amount. These discount columns are for the memorandum purpose only, which is for the reference. The following figure shows the process of recording information from the source document into the cash book and posting to the ledger. So when we have the cash transactions, we will involve with source document that related to the cash transaction, such as the cash register slip, cash bills, receipt, or payment voucher. So based on this source document, we will record in the cash book as part of the books of prime entry. Then, from the cash book, the item will be transferred to the relevant ledger accounts. As discussed in the previous topic, we know that from each transaction, we may involve with the cash discount. A cash discount is a reduction in the price of an item for sales allowed if payment is made within stipulated period of time. It is usually given to encourage debtors or the customers to settle their debts earlier or within a specified period. Discount terms are usually stated in the invoice. If you have discount on the transactions given, the cash discount will be recorded either as the discount allowed or discount received. Discount allowed is discount given to debtors if they settle their accounts within a stipulated time. So, as you are the one that given the discount, this discount allowed will be considered as your cost or your expense. To record the transactions, you need to debit cash or bank from the payment received from your debtor. Debit also the discount allowed as your expenses or your costs, and credit the debtor's amount. For the discount received, it is actually received from the creditors if a business pays its creditors within a stipulated time. To record this discount received, you need to debit the creditors, credit the discount received, and credit the cash or bank. Discount received will be recorded on the credit side since it will become as part of your other income. Discount column in the cash book do not represent discount accounts. They are only memorandum columns, and these two accounts still need to be opened in the ledger later. Next, let us look at the example on how to record the cash discount. On 1st January, Calvin Poe bought goods from Kwa Brothers 2000 on account. The terms of payment was 10%, 30 days. Based on this transaction, we need to record debit purchase and credit Kwa Brothers 2000. The terms of payment would tell us that if the payment is made within 30 days, then there will be a cash discount of 10%. For 2nd January, Calvin Poe sold goods to Charles Beck for 1000 on credit. The terms of payment was 5% 30 days. So to record the transactions, we debit Charles Beck and credit sales 1000. If the payment is made within the 30 days, there will be a cash discount of 5% for this transaction. For the 20th January, Calvin Poe settled his account with Kwa Brothers by checks. As this payment is made on the 20th January, which is within the 30 days times given, then Calvin Poe will be entitled to a cash discount of 10%. Therefore, to record the 20th January transaction, we need to debit Kwa Brothers 2000, credit bank 1800, and credit discount received 200. For the last transaction, 21st January, received a check from Charles Beck for full settlement of his account. For this transaction, as the payment is made within the 30 days as well, therefore there will be a cash discount of 5%. For the 21st January transaction, the double entry will be debit bank 950, debit discount allowed 50, and credit Charles Beck 1000. The entries in the books of Calvin Poe for the previous transactions are shown as follows. In the 3-column cash book, we will record the payment received from the debtors on the debit side, which received from Charles Beck on the January 21st, together with the discount allowed of 50 ringgit. While on the credit side of the 3-column cash book, we will record the payment made to Kwa Brothers together with the discount that we received from the transactions. From this 3-column cash book, we will transfer all the items in the Charles Beck account and the Kwa Brothers account together with the discount amount. For the discount column, as we know that the items in the 3-column cash book are only for the memorandum purposes, we still need to open the discount allowed and the discount received in the general ledger. So, for the discount allowed account, we have to debit the amount, and in the discount received account, we will need to credit the account. Discounts column in the 3-column cash book, still not the double entry. That is just for the reference. Next, contra entries. The cash book has two accounts, cash and bank. Hence, it is possible to have a debit entry as well as a credit entry at the same time within the cash book with no other ledger entries required. Such entries are called contra entries. Contra entries are involved when cash is transferred from the office, which is from the cash column in the cash book, to the bank. The double entry for this will be debit bank and credit cash. Contra entries will also be involved when cash is withdrawn from the bank for office use, which will be related to the cash column in the cash book. The journal entry for this will be debit cash and credit bank. As you can see from these two examples, both debit and credit involved with cash and bank, and both items are actually the columns inside the cash books. So, Because of this, the transactions are called as the contra entries. Now let us look at the example for contra entries. On January 5th, we transfer cash to bank, 4,000. The journal entry will be debit bank, credit cash. On the 28th January, withdrew cash from bank for office use. So the double entry for this will be debit cash and credit bank. To record these transactions in the 3-column cash book, we have to refer back to our journal entry. On the 5th January, when cash is transferred from the office to the bank, the effects are as follows. Bank increase, therefore the bank account as debited. Cash will decrease, therefore the cash account is credited. On the 28th January, when cash is withdrawn from the bank for office use, the effect will be cash increase. Therefore, the cash account is debited and bank decrease. Therefore, the bank account is credited. The double entry system is completed within the cash book itself and no other posting to the ledger is required for the contra entries. Contra entries are indicated by C or a tick in the folio column. As you can see in the 3-column cash book, we will need to record both sides for each transaction because each transaction involved with cash and bank at the same time. Dishonored check or return checks. Dishonored checks are checks where payments are refused. A check can become dishonored because of one of the following reasons. First, the drawer has insufficient money in his current account. Example, refer to drawer. Next, the amounts written in words and in figures do not tally. Technical reason. Number 3, the signature of the drawer differed from the specimen signature given to the bank, which is related to the technical reason as well. And the check may be a post-dated check. Dishonored checks are the checks that you cannot cash in the bank. Therefore, when you have the dishonored checks, you need to reverse back the entries that you made previously. For example, on the 1st January, you owes the business 500. This is considered as the opening balance during the accounting period. On the 10th January, paid check 480 in full settlement of his account. So to record these transactions, we debit bank 480, debit discount allowed 20, and credit debtors 500. So this will be shown in the 3-column cash book. In the 3-column cash book, the amount of discount and the bank will be recorded on the debit side on the January 10. This is the amount that we receive from you or me during the year to settle his account. Next, on the 15th January, check written by bank marked refer to drawer. So when you receive the check back from your bank, this is considered as the dishonored check. The bank cannot process and clear the check because of certain reason. Therefore, you need to reverse back the transaction that you made previously. For the 15 January transactions, you need to record as debit debtors 500, credit bank 480, and credit discount allowed 20 ringgit. So this will be shown on the credit side of the 3-column cash book, except for the discount allowed, since the discount allowed have been recorded in the discount allowed column previously. Next is the full example of the three-column cash book. The balances shown in Heng Motors cash book at 1st December 2019 were bank 1630 and cash 820. The following receipt and payments occurred during the December 2019 given below. On the 2nd December, received a check for 1,000 from SEMI as a loan repayable in 5 years. For these transactions, we debit bank, credit loan, SEMI. 3rd December, purchase office equipment for 1,210 and paid by check. So, debit office equipment, credit bank 1210. 4th December, purchase in cash goods for resale costing 340. So, we debit purchase, credit cash 340 ringgit. 5th December, paid wages 150 in cash. Debit wages, credit cash 150. 6th December, cash sales paid immediately into bank 480. For these transactions, we debit bank credit sales 480 ringgit. 8th December, purchases by check 370. So, debit purchase, credit bank 370. 9th December, cash sales of 160. Debit cash, credit sales 160 ringgit. For 11 December, check sales 280. So debit bank credit sales. 12 December, paid telephone bill by check 320. For these transactions, we debit telephone bill, credit bank. For 15 December, paid cash 200 ringgit into bank. This is a contra transaction. We debit bank and we credit cash. Next, on the 17th, drawings by check 250. So, debit drawing, credit bank. 18 December, bought stationery 80 ringgit by cash. Debit stationery, credit cash. 20th December, introduce additional capital in the form of a check for 500. Debit bank, credit capital, 500. 21st December, paid water rates of 430 by check. Debit rates, credit bank. 23rd December, withdrew cash of 100 ringgit from bank. This is a contra transaction. So, you debit cash, you credit bank. 24th December, received a check for 640 from Ali, who deducted 35 ringgit cash discount. For this transaction, we will have a discount allowed. So, we debit bank, debit discount allowed, and credit Ali. For the 27th December, paid Farida 720 by check after deducting 25 ringgit cash discount. For this transaction, we will have a discount receipt of 25 ringgit. So, we debit Farida, credit bank, and credit discount receipt. 28 December, Averdeen sent us a check for 860 after deducting 45 ringgit cash discount. For this transaction, we have a discount allowed of 45 ringgit. So we need to debit bank, debit discount allowed, and credit Evelyn. For the 29th December, received a check from Ah Chong for 920 who deducted 50 ringgit cash discount, which we did not allow. For this transaction, since we did not allow the discounts, so we do not have to record any discount for this transaction. Our journal entry for this will become debit bank credit Ah Chong. Based on these transactions, we have to prepare the three-column cash book. To prepare the three-column cash book, refer back to all the journal entries that we already discussed in the previous slides. Whatever you debit for cash and bank, that item you record on the debit side of the three columns cash book. Whatever items that you credit for cash and bank previously, that item you will need to record on the credit side of the three column cash books. However, you need to remember for the contra transactions, you need to record on both sides, debit side and the credit side because the contract transactions involve with bank and cash at the same time. As usual, after we record all the transactions in our accounts, we need to balance up the account at the ends of the period. As for this example, we need to calculate the balance CD for both bank and cash on the 31st December as their year end. For this balance CD, the bank amount is equal to 3,100 ringgit and 10, and for the cash, the balance CD is 310 on the 31st December 2020. So this amount for both bank and cash will be carried down to the next accounting period as the balance BD on the 1st January. Next, we will continue with the petty cash book. In the daily operations of the business, there are many very small payments which do not warrant the use of checks. Therefore, the business needs to set aside some cash to cater to these small amounts. For example, to pay for the postage, stationery, or traveling expenses. The cash set aside is called petty cash. It is both a book of prime entry and part of the double entry system. Debits in this book are credited to an account in the ledger and no further entries are necessary. Credit in this book are debited to an account in the ledger and no further entries are necessary. The purpose of the petty cash book is, first, it is not practical to pay small amounts by checks. It will reduce the number of entries for small payments in the cash book. There is usually a large number of transactions in cash. If these small payments were recorded in a cash account in the ledger, it would be cumbersome. Then, the job of recording small payments can be assigned to a junior clerk. This will permit the divisions of labor, that is, the segregations of duties. And this is easy also to improve the control system in the business. The Impress system is a system for controlling petty cash. At the beginning of each period, like week or month, the petty cashier has a fixed amount of cash referred to as a float. At the end of each period or start of the next period, the petty cashier is reimbursed the exact amount spent during the period, thus making the float up to its original amount. So that will make the reimbursed amount equal to the amount spent. The reimbursement usually takes the form of a check drawn for cash. The amount of the petty cash float is determined by reference to the normal level of petty cash expenditure in each period. This slide illustrates the Impress system. For example, in the beginning of a period, such as weekly or monthly, a person in charge is given an amount in advance of expenditure. This amount is called the impress amount or float. For example, in this slide, let's say our float amount is 100 ringgit. So, during the months, there are small payments made such as postage 10 ringgit, stationery 10 ringgit, and traveling expenses 20 ringgit. Small payments are paid using this float amount. Small payment must be supported by a petty cash voucher and authorized by a responsible person. The amount spent during these months now equal to 10 postage plus stationery 10 and traveling expenses 20, so equal to 40 ringgit. At the end of the period, the chief cashier will reimburse or refund the amount that is similar to the amount spent. Now, since you are given the 100 ringgit float amount, you have used 40 ringgit during the month, your float amount now will become only 60 ringgit. But at the end of the period, okay, you will be receive another 40 ringgit to top up your float amount so that you will have 100 ringgit back at the end of the period. What are the advantages of Impress system? First, it facilitates control of the total petty cash expenditure in each period, as the petty cashier cannot spend more than the amount of the float except by applying to the managements for an increase. Number two, it deters theft of cash by the petty cashier, since a large cash balance cannot be accumulated by drawing cash at irregular intervals. Number three, the entries in the petty cash books are kept up to date because the cash expenditure is not reimbursed until the petty cash book is written up and the total amount of expenditure for the period is known. And it discourages the practice of loans and subs from petty cash, since this would have to be accounted for at the end of the period, and in addition may result in insufficient cash to meet the necessary expenditure. The columnar petty cash book. This contains analysis columns on the credit side, each of which relates to a particular type of expenditure and name of a ledger account. These are intended to facilitate the bulk posting of transactions to the ledger. At the end of each calendar month, the total of each analysis column is debited to the relevant ledger account. For example, Sam uses a columnar petty cash book to record his cash payments. He also operates an Impress system with a float of 100 ringgit and 50. During August 2019, the cash transactions were as follows. Sam involved with expenditure such as stamps, cleaning materials, telegram, ang pao to rubbish disposal men, tea, milk and others, bus fare, paper clips and pens, office cleaner, taxi fare, envelopes, post laju, A4 paper, Milo and sugar, and receive reimbursement to make up float to 150. So to record the transactions, we will start with the float amount of 150 ringgit as balance PD. All the expenditures then to be recorded one by one under the relevant column. Such as for this example, we may group the expenditure under the telephone and postage, cleaning, printing and stationery, traveling, and miscellaneous expenses. The total expenditure during the year equal to 114 ringgit. Therefore, to meet the 150 float amount again, we have to top up the 114 ringgit as our reimbursement amount so that our balance CD will become 150 again. So this balance CD then will be continued as the balance PD in the following period. That's all our discussions for the topic 5 part 2. Next, we will continue with the topic 6.